What's up, guys? Welcome to another edition of This Week in Crypto. I'm your host, Brian, alongside my co-host, Dino. We've got a lot of data to go over today after Bitcoin has retraced below 50,000, specifically below 48,000 for the first time since March 5th. So this is right around a 6 to 7 week low for Bitcoin's price right now. Some are calling it an opportunity. Others are calling it, the beginning of a very large dip. And this polarizing type of opinion is always a juicy time to talk about what's happening in the markets. Of course, to start things out, I always want to remind everyone that everything we go over here on this call is not to be considered investment advice. We are here to objectively show what our data is indicating about the markets, talking about on-chain and social fluctuations and bearish and bullish divergences that are forming based on historical values and what has happened in the past when these types of patterns have occurred. So keep that in mind. We are not here to tell you to buy or sell anything, simply to show you what our data is indicating. So to lead things off here, of course, we always try to start with just a little bit of context by showing what the price fluctuations have been for around the top 100 assets. As we can see, it is pretty universally red. We've got one ETH-based project here that has stood out. Good old Pirate Chain R is all by itself at plus 77% over the last 24 hours. We also have Bitcoin Gold at plus 9%, but pretty much everything else outside of DAI, which of course is a stable coin, so you can ignore that. Everything else is in the red by a pretty heavy amount. Bitcoin dropped 10.1% in the last 24 hours. You can see other projects got down to as low as minus 27% here. Sia Coin really got hammered. Raven Coin, Ontology, Quantum, a lot that dropped about a quarter of their value just in the last 24 hours. Looking at the 7-day switch, or price change, I should say, it's a pretty similar story. Pirate Chain, for whatever reason, plus 257%. We're not going to get too much into that. But the main story is that you can see over the weekly scale, we had a few that almost dropped half of their value. Avalanche just got absolutely hammered with a minus 43%. Holo got down minus 48% after its pun intended hot start to the year. Bitcoin is down 21.5% now, just in the last 7 days, and that's a big drop off since we made an all-time high. I think it was 5 days ago, something around that, where we got up to about 64. Now down at about 47, 48 actually currently, but we hit as low as 47.1K a few hours ago. So lots of retracing going on, and we're going to be investigating mostly what the health of Bitcoin and Ethereum are looking like, since those are going to be triggers for the rest of crypto, as usual, to be able to either rebound or bleed even further. Dino, I think that we can segue here into a few of the reasonings we're seeing as to why the retraces happen over the past week.
Sure. Yeah. So let's just cover the. By the way, can you hear me well?
Can hear you fine. Yeah.
Okay, so let's just cover very quickly the top few reasons why people think that this is happening, at least what I'm seeing on both crypto social media and crypto publications in general. So actually, Brian, if you want to go to our social trends, there is some merit to this first topic that I'm going to cover, and that's taxes. So basically, a lot of people seem to believe that this entire drop is an overreaction to the Biden proposed tax hike for capital gains on people earning over $1 million. So if you type in tax or taxes in our social trends tool, and for those that are unfamiliar with this tool, essentially what it does is it looks for all the mentions of a particular word on over 1,000 different social media channels that we track, right? So you are going to see a relatively big spike in the amount of tax-related mentions on crypto social media in particular over the last 24, really over the last 12 hours or so since the dip. So there seems to be quite a bit of sort of confirmation bias here, where people believe that this is mostly related to taxes and Biden's proposals. Another topic that I did sort of see, which is not necessarily related to which is not necessarily a cause for the dump, but it seems to maybe have contributed to it, is the kimchi premium. So actually, Brian, if you go to Bitcoin's transaction volume, there seems to be at least some semblance of clues that this might be happening. For those unfamiliar with what Kimchi Premium is, Kimchi Premium basically measures the sort of spread between Bitcoin's price on Korean exchanges versus everywhere else, right? So a few days ago, there was sort of a widely reported news that South Korea is trying to sort of clamp down on illegal activities around cryptocurrencies, and as a result, massive spike in Kimchi Premium between cryptocurrency exchanges in South Korea and everywhere else. And that's why, for example, you see this massive spike in transaction volume. So basically the amount of Bitcoin being moved on the blockchain. But if you look at Bitcoin circulation, Brian, 1-day circulation, which is showing the total amount of unique Bitcoin that are being transacted on the blockchain, there's no such spike. So essentially what that means is that there wasn't any sort of additional Bitcoin being moved on the blockchain, right? There was only a repeated moves of same BTC over and over again on the network. So that does suggest sort of arbitraging opportunities that people were looking for. And as a result, I think the Kimchi Premium was pretty much flattened out over the last 8 hours or so. So it does seem to imply that people were in fact moving a lot of the same Bitcoin between different exchanges in order to sort of take advantage of the arbitrage opportunity presented by the Kimchi Premium. So there are a few sort of different reasons why we might be seeing this correction. I think Max is going to be joining us, our CEO is going to be joining us in about 15 minutes. Literally yesterday, we were talking about the state of the market and he predicted this dip. So I'm very sort of interested in hearing why he thought that this was going to happen from a macro perspective. But these are sort of the main reasons why I'm seeing it happen, why I'm seeing people think that it happened on social media, Brian. We can obviously talk more about general sort of Bitcoin indicators. I think there's a lot of cool stuff that's currently happening on the Bitcoin's network data and social data. But yeah, these are at least sort of overall the reasons why people think this is happening.
Yeah, and of course, on top of those reasons, there's a lot of people that are just pointing to math and saying we got, way too overbought. There was a little too much FOMO, and there's just a natural retracement that comes from that. For those of you who tuned in last week and even the week before, we talked a little bit about the overall token circulation for Bitcoin compared to where the market cap was sitting. And I won't get into the major details of how this model works, but in short, when you see red bars, it generally means we're not getting enough token circulation compared to market cap. When you're seeing green, especially bright green like this, that means we're getting an excess of token circulation, and generally prices rise very quickly when that happens, as we can see here during these 5 months of green. And then once we turned red here, look how the price kind of turned on a dime, and we're now actually below this right around here now after we see the day close, assuming it goes below 51.7. But we are in a spot right now where there isn't quite enough unique amount of tokens being transacted from wallet to wallet. And when that happens, the lack of utility generally will have a negative impact on the price. We'll talk more about Ethereum momentarily, but while I'm on the model, I just want to point out that Ethereum, on the other hand, is still looking quite bullish and getting a ton of token circulation compared to its market cap, staying in the green zone for basically its 12th straight month now, which is pretty impressive. Of course, Ethereum is still going to rely on Bitcoin's health to an extent, so you have to take this with a grain of salt for now. We'll come back to Ethereum more, but I want to jump back and show a few more things on the social trend side. This is just an overall look at what Bitcoin mentions look like right now. We see that social volume is actually staying up, and it's been up for about 10 days compared to where it was pretty much for the previous month here. However, social dominance, which is shown in this orange line here, it's actually down. And my theory is that it's simply because altcoins are getting hammered a lot more than Bitcoin right now, and people aren't quite addressing the big elephant in the room, which is Bitcoin's on-chain health. That's for advanced traders. When they see a big dip like this, they're naturally going to be looking at how the on-chain and social metrics are looking for the number one asset, which is basically the foreshadower for the rest of crypto. But right now, I think it's still being ignored a little bit, and altcoins and other subjects are kind of getting uh, a bit of the lion's share of focus because there's so much retracement for assets like Doge and uh, many other top 100 ETH-based assets and non-ETH-based assets. And we're just going to have to see how it plays out over the next week. But right now, social dominance is rather low comparatively. Look at how high dominance was back here. There was a point where it was about 9% of all subjects in crypto um, when prices were rising a ton. So for contrast, I mean, you will see people talking about Bitcoin less when it's dropping compared to when it's rising. But if it drops too much to the point where panic starts to sit in, where it doesn't seem to be happening just yet, that's when you'll start to see the social dominance really rise up. Um, we can also look at something like altcoin, or altcoins, and it kind of proves my point here. You can see here in this little orange line uh, that happened today, and when social volume hit its highest spike in about 3 months, that people are talking much more about it to really reveal how leveraged the crowd has been in altcoins because of the enticement of getting into it, and the upside of getting into the type of asset that might 2x or 3x or 4x in a short period of time compared to Bitcoin being a little less volatile. And a lot of them just ended up getting quite trapped and quite hurt by this big Bitcoin retracement right now.
Right. So I want to address a few points that were already raised in chat. The quote saying that the market has been entirely over leveraged. It's that simple. I don't think it's that simple, but I think it's definitely part of the
Part
problem.
of it.
If you look at Bitcoin's funding rate, Brian, we currently have integrated Bitcoin's funding rate on BitMEX in particular over the last, I think that's good. You can even look at the last year just to kind of put it in context to see exactly how big these spikes in funding rates are. So the funding rate is a fee that is paid by one side of the perpetual contract to the other. Essentially, when the funding rate is high, it means that the market is long on average, or that Bitcoin longs are paying Bitcoin shorts, or that the cost for opening or holding a long position is larger than usual. In general, the spikes in funding rates suggest that the market is very bullish and very often over leveraged long. So we have seen, especially to start this week, basically over the last weekend, we have seen massive spikes in funding rates across exchanges. So this is BitMEX, but we have seen pretty much the same story on Binance, Huobi, OKX, and as a result, we had a record number of liquidations on last Sunday. It was $9.6 billion of liquidations. It was the highest ever day in terms of how many longs got liquidated within a 24-hour span. So for sure, we have seen that the market has become very much overzealous, but this is only when it comes to sort of a derivatives rate and funding rate in particular. So obviously over the last sort of week of data, we have seen these funding rates go back to normal, suggesting that the market's bullish bias has, at least for the time being, start to evaporate a little bit. But I do also want to look at MVRV for Bitcoin, Brian. And if you want to look at, let's say, both 30, let's start with the 30-day MVRV, and let's then look at the 365-day MVRV. So this is another sort of example of just exactly how overvalued I think the markets have been over the last couple of months. And this is something that we've been talking about for a while now. So the MVRV ratio is an on-chain metric that tries to sort of figure out, it tries to visualize the same thing that the funding rate does, that the social metrics of ours try to do, which is how overvalued or undervalued a coin is at any given point in time. So the way that this metric is calculated is, what it tries to calculate is the average profit or the average loss of all coins that have been acquired within a certain time frame. So the 30-day MVRV ratio, essentially what it tries to do is it tries to quantify the average profit of all short-term Bitcoin traders, all addresses that have acquired Bitcoin in the past 30 days. So the way that people use this metric in general is the higher the MVRV means the more the unclaimed profits there are. So the more money there is sitting on the table for in this case, short-term traders, and then we'll move into the long-term traders as well. So the higher the MVRV ratio is, the more unclaimed profits there are. Therefore, the more potential sell-side pressure there is, because people can start taking their profits and exerting negative price pressure on the market. We have been, for basically the entirety of this bull cycle since January, we have been in technically overvalued territory for according to Bitcoin's MVRV ratios, both short-term and long-term MVRV. So when we look at the Brian, if you want to maybe, I don't know, look at the last 2 years of data. So instead of 20, check put 19 there, just so we can see exactly how big this is. There we go. So this is sort of the 30-day MVRV ratio for Bitcoin, and you can see that we have sort of been in a decline, but overall it has hovered around that 0% or break-even mark for a while, indicating that short-term traders were on average up on their initial investment. Currently, they are down minus 15% on average on their initial investment. And this is, at least according to onchain analysts, this is a pretty interesting development in the market. We are currently sitting at a yearly low for Bitcoin's 30-day MVRV ratio, which suggests that on average the market is oversold. The coin is undervalued, and this is the sort of metric that we're seeing currently be in the negative territory, not just for Bitcoin, but Ethereum and pretty much all of the top caps. If you look at the 365-day MVRV ratio, which looks at the average profit or average loss of all long-term Bitcoin holders, we're still in the positive. So, compared to the previous year of data, pretty much the entirety of 2020, currently we're at about plus 24%. So every address that has acquired Bitcoin in the past 365 days, on average, they are currently about a quarter up on their initial investment still. So there's still sort of unclaimed profits on the table that can be taken away and that can be sort of used to apply additional sell-side pressure on the price of the coin and the market in general. So even still, according to the 365-day MVRV ratio, according to long-term holders, they're still sort of in profit, and in general, the MVRV points to slightly overvalued conditions. However, I would say that this was a much-needed dump in order to for these metrics, especially these valuation metrics that have been kind of super high for a while now, to begin to normalize. They're not super, they're not completely flattened out yet. They're not back to where I would necessarily like them to be, but they're getting there, right? So I believe that overall the market has become a bit too euphoric, a bit too over-leveraged, and we are now seeing sort of the results of that. The fact that Bitcoin's 30-day MVRV ratio is so low at the moment, I think suggests that we are sort of approaching a support level. So if you sort of draw a line there, you'll notice that this is pretty much where we were in 2019 at its lowest. Yeah, so obviously I wouldn't use that massive outlier during the coronavirus dump. I think that's a sort of a black swan event. But if you sort of put that aside and you look at all of these other points at which we were this low as far as Bitcoin's 30-day or short-term MVRV is concerned, we're as low as we have gotten over the last 2 years. So according to onchain analysts, and again, this is by no means financial advice, and like I said, the long-term MVRV ratio is still pretty high. According to onchain analysts, the lower the MVRV gets, the more opportune time it can be possibly to accumulate a coin because it is undervalued overall, right? So yeah, I think, like I said, both the derivative side of the market and the on-chain side of the market did indeed point to massively overvalued conditions for a while now. So I actually think it's pretty healthy that we're seeing a correction over the last couple of days and couple of hours.
I would agree. Yeah, I mean, if the 30-day MVRV is literally at a year low, it's a pretty good indication that this is the kind of dip that is really going to impact portfolios in a way we haven't seen since Black Thursday, really. And even though it's a relatively minor dip, I mean, yes, we dropped from about 64 down to all the way to 47, and that's large. We've seen percentage dips over the past year that were comparable. I mean, we can see one visually right here back in January that didn't really have nearly the impact. It had a big MVRV impact, but not nearly where it is now. And that's, as Dino mentioned, kind of uh, an explanation that people were a bit over leveraged and a little too FOMO'd right now. And I've got this MVRV model here as well that shows kind of the opportunity versus danger zones, and it kind of aligns with what we just showed. Bitcoin, of course, here is just above neutral. You would think it's a little more bullish, but what this is doing is comparing the 1, the 7, the 30, the 90, the 6 month, and the 1 year MVRVs for Bitcoin, and showing just how above or below water it is. And when they're universally below water, as you can see for something like, storage or synthetics over here, that's when they really show that they're underbought. Bitcoin still has the 6 month and 1 year MVRVs that are well above zero, meaning people that invested 6 months or 1 year ago are still really well into profit because they bought shortly after Black Thursday in this case, and they bought around October in this case when Bitcoin's price was significantly lower. So we really want to see all of those MVRVs start to neutralize to really show a buy signal. But at least for now, after this dip, it's the first time that we weren't just seeing a bunch of orange and red across the board. It was mostly looking like, these colors, like Maker, for example, because it's up so much, it's still showing as overbought. But for most assets now, we're starting to see a lot of yellow, green, and green. So I find
Yeah.
that interesting.
So, I mean, speaking of just where the market is at the moment, not only was this, I think, a much needed correction, I think we are now seeing sort of wholesale panic on the market, which can also be a pretty positive indicator in the short term, right? So some of the ways that we can kind of see that on our charts is by looking at the exchange inflow of different coins, which basically shows the amount of specific coins being moved to known exchange wallets over the past 24 hours. And starting with Bitcoin, you can already see sort of an uptrend in the amount of BTC being moved to exchanges over over the last 24 hours, suggesting that people are starting to, sell off parts of their bags, reduce their exposure, mitigate risk in expectance of a much larger correction, right? So if you look at the 1 hour interval there we go.
Zoom into the last month
Yeah,
here.
zoom into the last month of data. There, so we're seeing sort of this spike in exchange inflow over right around the bottom there, and we're also seeing sort of a collection of spikes in the exchange flow balance for Bitcoin as well, which is the difference between the amount of Bitcoin moving into exchanges and amount of Bitcoin moving out of exchanges. So Brian, if you only leave the exchange inflow open, and let's just look at a few coins overall. So go to Ethereum, let's see what's happening as far as the amount of BTC moving into exchanges. Again, we are seeing sort of an uptick in the overall sell side pressure for BTC. If you move to, I think, Sushi, I have seen a sort of massive rise in the overall amount of Sushi moving to exchanges. Again, suggesting that we are sort of in a panic mode. A lot of people are starting to offload their bags at a rapid clip. One other metric that I like to use to kind of visualize the amount of pain that is currently being felt by market users is network realized profit or loss. So if you also want to overlay that metric, Brian, I can explain what it does in a sort of a few sentences. So network realized profit or loss is a metric that tries to calculate the overall ROI of all transactions that are happening on the network on a daily basis, right? So essentially what it means is that when you see a spike in the network profit loss of a coin, it suggests that the coins at that point in time are being moved at a massive profit. And then when you see drops in network profit loss, especially below zero, it suggests that on average, all of the coins that have moved on the blockchain at that point in time are doing so at a relative loss. So for Bitcoin in particular, we have seen this massive sort of uptick in the network profit loss right before the correction started, suggesting maybe a few large addresses starting to move their bags before the correction, probably starting to take profits. If you look at especially these sort of mid to high cap coins, like for example, go back to Sushi, Brian. And we can also look at Maker, which had a massive drop as well. Yeah, so zoom out of that massive network profit loss spike right there. No, I mean, sorry, zoom in. My bad.
Got it.
My bad. Yeah, so what we're seeing is we're starting to see sort of these short-term dips in network profit loss, suggesting that at these points in time, these dips that you're seeing, that you've seen on around the April 19th bottom and you've seen over the past 24 hours, these suggest that people are starting to move sushi coins at a relative loss compared to when they've acquired those coins. So if you look at Maker as well, Brian, I think you will see a fairly similar sort of picture. There we go. So this, especially around the bottom there, we have seen these relatively big drops in network profit loss, once again suggesting that we are in fact seeing people start to offload their bags in a little bit of panic, right? Especially if you zoom into a lot of these coins over the last sort of week or so, you will notice the pattern sort of repeating itself over and over again. If you look at Ethereum as well, you will notice pretty much the same pattern. There we go. So sort of after a while, after sort of plateauing or being up for much of the last month, we have now started to see significant drop-offs in net profit loss over the last 24 to 48 hours. Once again, suggesting that on average, all of the coins that are being moved on the Ethereum network are being moved at a relative loss. Now, keep that in mind because just a few days ago, Ethereum has hit an all-time high. So the fact that on average, all of the coins that are being moved on the network are currently being moved at a loss, relatively speaking, does suggest that people, especially people that have acquired Ethereum earlier in the week, pretty much around the all-time high, are already starting to panic out of the coin. So overall, exchange inflow spikes, network profit loss drops. These types of metrics, to me at least in the short term, suggest that people are starting to move a lot of their coins to exchanges, presumably to sell. And a lot of addresses are moving their coins at a relative loss compared to when they've acquired them. These are sort of indicators of short-term FUD, panic, sell-offs, and in general oversold conditions. As a result, very often, I mean, not very often, but every now and again, we will see these metrics coincide with short-term bottoms. Obviously, nothing is guaranteed, and sometimes they just won't materialize like that. But I can definitely show a bunch of examples when these types of indicators have, marked periods of short-term price recovery. It doesn't mean that we're not going to see another drop-off from this point on. So don't take this as financial advice. But at the very least, it definitely seems to suggest sort of a retreat from a bullish bias that we've seen previously throughout April, and a sort of pivot toward a much more skeptical, fear-based economy over the last 48 to 72 hours, which is usually pretty good, especially when we were so over-leveraged and overvalued throughout the last couple of months, Brian.
Yeah, pretty fascinating here. I think that the network realized profit loss, as clearly shown on this graph, has a pretty significant degree of alpha. If you just look at some of these huge spikes for Ethereum over just the last week, you can see there was a huge one on April 17th, right before the drop off, a huge one as we approach the top on April 18th, another one on the 19th. I mean, if you're following this in real time, even in short term, types of perspectives here, you can see plenty of opportunities you'll have in advance to see these spikes and take profit accordingly. And then when you see them actually go into the negative right here, that's kind of an indication that you can dip buy and get an advantageous price for your trading. So I love this metric, and I want to start looking at this more myself for some of my insights that I make.
I mean, if you look at one of the coins that I really like looking at as far as that profit loss is concerned is iFi. So if you look at iFi, let's start with let's start the last month of data and then just zoom in maybe to the last couple of weeks. Yeah, or that is good actually.
You want the last week? Okay.
Yeah, I mean, you can already kind of see the patterns, and then also use so first of all, let's talk about what we're seeing here, right? So we're seeing massive upticks in network profit loss of iFi around a number of its local tops. So we've seen it on April 18th, we've seen it right before the correction on April 19th, and we've also seen it at the beginning of price consolidation on April 23rd as well, right? So all these sort of local price stops have coincided with a relative uptick in network profit loss, suggesting that the coins that were moving on those occasions were moving at significant profit. In other words, signaling short-term profit taking and sell-offs by IFI holders. And then on the other hand, a number of these short-term bottoms for IFI, so both on April 19th and 20th, and then on April 22nd, so more recently, and even I think April 21st there, we saw another sort of, yeah, right there. So we've seen these sort of low or negative rates in network profit loss around IFI's local bottoms as well, suggesting that at these points in time, people were moving their coins at relative loss. In general, suggesting oversold conditions and panic sell-offs. So these types of panic sell-offs events, I think, quite sometimes can suggest that if there's enough buy the dip pressure on the other side of the margin, can suggest that we're just sort of seeing weak hands capitulating and reallocating their coins to long-term bullish investors, which could be a positive sign for the market.
Yeah, fascinating there. I want to transition quickly into some whale activity to give a little perspective on what those top holders with the most at stake are doing right now. What we're looking at right now is the total supply distribution, in this case, the absolute values that are held by addresses containing between 100 to 10,000 Bitcoin. So this should sort of be considered the millionaire bracket for Bitcoin, ranging from about I guess I'd call it now 4.8 million all the way up to $480 million in their wallets. We can see there's been a very, very clear uptick throughout the last 6 months. And we did see not quite the largest retrace, but you can see here back on December 31st, this was probably the biggest over the past 6 months. And it gave you about 3 to 5 days, even a full week, to indicate that a top was coming before it eventually did back in January. This one is, of course, smaller and more along the lines of like a typical retracement, where we were at about 9.17 million held by this bracket and got all the way down to 9.11 million. So give or take about 60,000 Bitcoin was shed over this 6-day period. And when it did, you had kind of a couple days of lead, so alpha, to basically see the all-time high coming and then get out quickly based on what the millionaires were doing. And now we're continuing to see this drop off, and we're really going to have to see whether the millionaire bracket continues this long-term rise or if it starts to flatten out here. And another perspective would be this gold line here. So this is breaking down the amount of addresses that are under each bracket, and the gold line is representing the 1,000 or more address bracket. And we were up at about 2,489 of these 1,000 plus addresses back on February 7th. And we dropped all the way down to where we are now, which is 2,236. And that's a significant, 10%-ish drop in the amount of addresses that generally will have an impact on price given enough time. This is a little more of a long-term perspective, in my opinion, but you can clearly see, back on Christmas 2020, we were down at 2222 addresses and jumped really, really rapidly. Even when this drop happened, look how this gold line continued to rise. And that was an indication that we can continue moving upwards just due to the sheer amount of whales entering the space. And as soon as it got up to that 2476, 2489 range, that's when it just dropped right back down. And even though the price was going up, I say this is a long-term metric, because when whales stay down here for a long period of time, that generally is an indication that the price can't sustain itself for too much longer.
Yeah. Actually, Brian, if you don't mind me sharing my screen for a second, I do want to, and by the way, guys, two points of order before we continue. Number one, we've got Max here. So Max, I think, wants to share. Literally yesterday on one of our calls, we were talking about the market and where it might be headed, and Max basically said, I think we should prepare for a larger correction and we should sort of adjust our content strategy or marketing strategy accordingly. And this is what happens today. So number one, we're going to have Max talk to us about why he thought this was going to happen. And then afterwards, we want to look at a few coins from the chat. So I already see a few of them being discussed in chat. Max Bartel, if you want to create a straw poll so that people can vote on the coins that they want us to look into. I saw Ampleforth, I saw GRT. It would be a good idea. So that's going to come in about 10 minutes. Right before that, let me just share my screen very quickly and shill one of my insights that I wrote, and specifically because you brought up these whales, and I like looking at these whales quite a bit. These two groups combined. So basically, we are looking at the amount of Bitcoin that is being held by addresses holding between 1,000 and 10,000 BTC. So it's quite a large range, but they are essentially Bitcoin millionaires, right, and above. So one of my recent insights, as long as it loads, actually we can see it here on the chart. Maybe that's a better, yeah, here we go. Here, Bitcoin's new all-time high, what does the data say? I believe that was the one that I wrote. Nope, it was earlier than that or later than that. Let's see, we write a lot about Bitcoin, so. Was it here? Oh, here it is. I believe so. Yeah, so this was, when was this? This was April 18th. So this was last Saturday, right before the correction. And I pointed to what the Bitcoin whales were doing in this inside. Gary, if you want to share it in chat so people can look at it. And I said, while its MVRV ratios are still far from previous highs, I did mention that they're still high, but they're far from all-time highs. The ongoing decline in BTC whale holdings remains a concern and may suggest that Bitcoin's sell-side pressure is still not fully exhausted. And then on Sunday, we saw a market-wide correction. So obviously, you know, whenever I can toot my own horn a little bit, I will. I'm not above it. But the reason why I'm saying that now is because if you look at basically the last 3 months of data for this particular group of individuals, you know, Bitcoin's millionaires. Let me zoom in here. So you can't deny that there are some interesting patterns there. Obviously, it's a very large sort of segment of holders, and you can't really look at them as a monolith. However, on average, you do see some interesting patterns start to emerge. So they do seem to sort of buy the dips at several occasions here, and then you do see sort of declines in their holdings, collective holdings, around price points that are certainly not opportunistic, right? So you see them drop around the beginning of price consolidation. You see another sort of drop off here as Bitcoin starts to rally. You see another massive drop off as Bitcoin accomplishes a new all-time high on March. And then you see another wave of declines in their collective balances right before the April dump. So far, it seems that this group of millionaire addresses certainly seems to coincide with market corrections. So if we zoom in onto the last, basically the last day or so of data, we are seeing once again a drop in their collective balances. This is around a 10,000 Bitcoin drop in the last 24 hours alone. So it's not the biggest by any stretch of imagination, because like Brian said, this was around 60,000 BTC being moved away from their addresses, possibly to sell, possibly for other reasons as well. But overall, keep an eye on these two groups, guys, 100 to 1,000 and 1,000 to 10,000 Bitcoin in particular. If you look at historical patterns, they definitely seem to have an interesting relation with the market, their combined balances. So if this continues over the next couple of days, it could suggest that whales are starting to become more and more concerned about the state of the market. And when they do, it's not a great sign for the market health overall. So Max, are you here? Do you want to talk to us a little bit about your general sort of view of the market? Okay, do you want to share your screen?
Yes, I will share screen. Sorry for not sharing my camera.
No worries.
Getting warm here, so I'm dressed very lightly. Okay. Bildschirmteilen. Yeah,
okay.
Here. I think this one.
Let me know when you share.
Let me know if you see the right screen shared, because I have different screens here. This is the right one now shared.
Yep, it's the trading view one, right?
Yes, yes. So the story, because we show normally a lot of on-chain and social data, but I will, to show the point, I will use just pretty pure elliott waves, which are on a fundamental level, on fundamental behavior analysis level, it is the same. You try to spot the cycles, bigger cycles in the market, shorter cycles in the market, doesn't matter. You assume that there are cycles. You assume that the majority is always wrong at peaks. And you assume that you, by understanding where the crowd consensus is, you can get a better view on the market. Yeah. And we can use onchain data, or we can use other music like elliott waves for, I don't know, 10 years. I use this way of showing the structure. And as Dino said, we were discussing, actually, I didn't come from Bitcoin initially, even though I have this account for a long time. It was accounts for many different altcoins. Sushi, Uni, I don't remember, Curve, iFi, they're showing very interesting patterns where the cycle seems to be finished. And after we saw this Doge and Moon swap, that looks like a really, for the moment, cycle is done. This is how a cycle comes on the top. Sometimes it's a great news, but sometimes it's just madness, or let's say irrationality. But in the Bitcoin, if you place it, I typically start looking from December of 2018, where the first actually cycle already recovery from bear market from the whole 17, 18 started, and then we dropped during COVID. It was actually a deep correction, but it was already part of the bigger cycle. And everything after COVID dive till now, it was a very long extended the biggest part of the cycle. Wave 3 in terms of elliott, consistent also on the 5, and it looks very much as it's finished. What does it give to us? Yeah, and don't take it as an investment advice. We're just sharing things we're seeing for ourselves, and we act in a similar way. But how I position myself at the moment, that we will see. It will be very reasonable to see deep dive till 40, 35, maybe 1,000 Bitcoin corresponding alts. Also, many alts should correct maybe 50% from what they got. And that will make, and it should happen relatively swift, 1 month, 2 months, and it should really remove a lot of gains for most of the newcomers. And after this, we will make the final push, a really insane push to the wave 5, which will mark for a very long time. That's it for crypto. But before this, the next 1 2 months, this is what we observe. The structure, and as you see, there is on the bottom even divergency on RSI, and we had this divergency on many on-chain metrics too, like price is pushing, but like metrics are not following, like activity of the network is not increasing anymore as much as it should be. Especially you can see it in many alts. Yeah, as I said, Bitcoin, Ethereum, they were quite okay. Daily active addresses were quite strong. But once you take even top DeFi projects, you will see this pattern all over again. Yeah, price is pushing, but who's participating? Yeah? And crowd is not there anymore. Crowd already fully invested. And this divergence it's often leads to the dive or drop or crash even. But the market recovers one more last time. Yeah? It's just a double confusion. And based on it, this is how we want to play now, unless it changes. So let's see the logo. Yeah, and you see this colorful lines where it begins. It's like where it makes sense market to bottom. In the previous way where we consolidated for a long time, and it's between 42 and 30,000 for Bitcoin. So in this area, most likely we will try to bottom even before. And if it doesn't happen, well, we can crash through this even lower. But this is like too early to say. For time being, market will not probably crash. He will try to go back to. Let me take even bigger one. Yeah, it will likely try to get back to 54,000, 52,000. Yeah, because the value is quite some concerns. And only after this, it can continue to direction 40. So I try to like squeeze intense, but taken from big picture and to like what happens next. Keep in mind the big wave likely like the most exciting part of advanced likely already happened. So now you need to play from the control the risk side. It means be very careful when you pick up altcoins, shitcoins. It was fun to play them. Now anytime it might become not fun, but pain in your portfolio. Be very careful. And there are some which do seem to continue the cycle, but it's like literally 10%, 90%. Whenever we look into it, it seems to be finished. Yeah. Yeah, I will not say which one not finished because like, it's separate, but just 90% seem to be finished, almost everything. And you know, the market, as I always say whenever we discuss in our internal team, the market is here actually to make you feel very painful, either financially or emotionally. So this is the main purpose of the market. Not, well, we have fun with it when it works in our way, but it works very often against all our expectations. And to make this pain at least not financially, but only emotionally, it's okay to keep. And I myself also keep some part of portfolio crypto. But we're playing from the safe side now. Yeah, we hope to catch it somewhere around 40,000. Yeah, this is setup we're playing now. Mm-hmm. But it will not happen. It will happen right now. Yeah, market never goes in one straight line. It always like now probably will go up a little bit, 50, 52, 55, and then will try to crash again. Yeah. So I think I try to give, and for Ethereum is the same. For Ethereum is very similar count.
Mm-hmm. All right. Thank you for the macro overview, Max.
Yeah.
I am going to take the screen away from you now. Yes, and I'm going to start looking at some metrics. So we got the winners of the poll. It seems like GRT is number one at the moment by votes. So we're going to start with that. And then we still have time, so we can kind of go over a few coins as we go along. So all right, Graph. Graph has only maybe like 3 months of data, not even that much. How much? Yeah, around 4 months of data. So yeah, we're not going to be able to use like super long-term indicators like 365-day MVRV because it's useless, right? But at the very least, let's figure out where Graph is at the moment and especially what the metrics are looking like right now. As it begins to experience this massive correction as everything else in the market. So let's start with exchange inflow, and generally let's look at the amount of Graph being moved to exchanges. And pretty much you see the same image that you're seeing across a lot of, not all, but a lot of altcoins on the market right now. By the way, can you see my screen? You can, right, Brian? Testing.
Yeah. Everything looks good.
Okay, good. Just checking. Yep. So this is the amount of GRT being moved to exchanges over the last 24 hours or so. A few big spikes suggesting that on average, more and more sell-side pressure is probably coming to GRT. You saw actually this massive spike right before another crash. So somebody was likely moving a lot of GRT to exchanges right here. Like if we really wanted, and we don't really do this, guys, on these calls because it takes too much time sometimes, but if you really wanted to zero in on where this type of sell-side pressure is coming from, you can do it on our platform. So the best way to do it would be to go to Graph and you type in top transactions here, and you click on this button here that you get, and what you're going to receive is this list. This list shows the biggest transactions for GRT across a particular time frame. So let's say I want to look at these big spikes in exchange inflow, right, over the last couple of days. So I select only the last 2 days of data, and I filter out all of the coins by value. So what we're going to see here are all of the biggest transactions for GRT over the last couple of days, filtered by the sort of the biggest amounts, right? So this one, 12 million GRT moving on April 21st around 1756. So that's, yeah, that's around here, right? Yeah, exactly. This one right here. Probably. So one thing that you can then do is, first of all, you can see exactly where it came from and where it went. And you can also look at both the sender and receiver address, and you can look at the historical data of this particular address. So this is the sender address. And you can kind of see what is the historical balance of this address. All right, so this particular guy, whoever it is, he got into GRT right at the start. Basically, probably bought into its token sale, and then he still has. I mean, first of all, this is 720 million graph, so this could be an ecosystem wallet or whatever. So we would need to do a bit of a deeper dive into figuring out exactly what this wallet is. But the first drop off in its balance was here on March 26th, around 40 million, and then we saw another dip on April 21st, right? So these are sort of the things that you can do to explore these biggest transactions. So for example, the next thing that I would do, I would look at deposits, I would look at transactions that go to exchanges. So it seems like these two are connected. So as you can see, this guy sent, or this address sent 5 million GRT to a deposit address, 0x2B2, which is this one. And then this deposit address obviously sent the same 5 million to a cold or hot storage of a centralized exchange. So you can basically see the labels for these two transactions. Obviously, they are connected. They're probably, so the flow is a whale sends 5 million GRT to a deposit address, and then from a deposit address, it goes directly to a centralized exchange storage, right? So this is the first address. And what we can do here is we can see, all right, what is the behavior of this address as far as the graph is concerned? Let's see. Okay, so this is a person that has also accumulated about 100 million graph at the token sale. We can see that it started selling not right at the top, but he was worried when the price of graph started to decline after an all-time high. So, you know, this is where he started feeling some weak hands, right? Dropped a lot throughout the maybe 3 to 4 day span. He dumped another sort of, how much is this? Another 20 million graph? Yeah, around 20 million graph, pretty much as the graph started to recover.
Can you, sorry, short interruption, can you or someone post address in our chat? I will also look into it from different perspective.
Sure. Yeah. I can do it actually. I would need to go into the YouTube chat. Gary, if you can find it, it's yeah, just zoom into the last 2 days of data and you will find this address. And then we can see sort of the lower or smaller dips in its balance before the crash, right? So here there's a wealth of data, and usually you are able to pinpoint exactly the culprits for these types of spikes in exchange inflow. You can pinpoint exactly what whales are moving their coins to exchanges, and you know how much they still own, how much they dumped when they accumulated, stuff like that. It can be very interesting as far as analysis is concerned, but it can take a bit of time, like sometimes even an hour, to really do it properly. So I don't want to go too deep into it, but if you want to zero in on exactly where the sell side pressure is coming from and maybe even set up alerts for those addresses, you can do so this way, right? Okay, so obviously spikes in exchange inflow suggesting people are starting to feel pain. GRT is sort of dumping significantly, as is everything else. So it's not too surprising. And then if we look at net for profit loss, if we zoom in, yeah, so a few sort of dips. We are seeing this spike in profit taking right before a correction, but overall, I mean, in general, it's not that bad. Like it's if you zoom out, it doesn't suggest that the coins that are being moved at this point in time are moved at a significant loss. So overall, it might be some short-term traders that are losing their bags, but overall, and we can confirm that with age consumed. Yeah, so age consumed is a metric that tracks the renewed activity of previously dormant coins. So when you see spikes in age consumed, what that means, like for example here, what that means is that a significant amount of coins that were dormant for a relatively long time are starting to move on the blockchain as well again. So when you see sort of this cluster of age consumed spikes, it suggests that the whole behavior of long-term holders has started to change. They're basically coming out of their hibernation, and usually that can indicate, periods of increased price volatility, right? So you can see it here as well as here. Sometimes they're at the bottom, sometimes at the tops. Currently, we're not really seeing a whole lot of increased activity in terms of age consumed. We have seen one right before the dump, but overall, it seems like long-term GRT holders are so far, holding on to their bags. They're not really reacting too much to the pump. If we look at sort of the general activity of GRT, so every time that I analyze a coin, I also like to look at exactly how healthy is the network overall. Not necessarily as it relates to current price action, but just like overall, are people still interacting with this coin? Is this coin still in demand, or is the network pretty much dead? So at the moment, we are seeing that the amount of activity for GRT, and obviously it's going to spike as the price starts to rise. So the amount of unique addresses sending or receiving GRT has pretty much normalized at about 1,700, 1,800 addresses. That's a lot. That probably puts it in the top 20, well, maybe top 30 coins on the Ethereum blockchain in terms of daily on-chain activity, in terms of daily addresses interacting, or the amount of daily addresses interacting with this coin. So the coin is by no means dead. It seems to have normalized at these levels. Ideally, what you want to see is a stable increase in the amount of addresses interacting with the coin, because it suggests that there's a sort of an ongoing growth in the demand for the coin, and the adoption rate for the coin in question is skyrocketing. We are not seeing that at the moment, but at least it has sort of stabilized, and it isn't in a decline, right? Especially when you're like, for example, Bitcoin's daily active addresses over the last couple of days have kind of fallen off the roof, because a lot of people seem to be scared to move the coin at the moment. They seem to be expecting further price volatility. So not so much for GRT. It seems like overall there's a stable sort of amount of network interaction, which I think is good. And then if we look at sort of indicators like MVRV, so obviously when you have a coin that is only a couple of months old, like GRT is, indicators like MVRV are sort of they lose their relative effectiveness, right? So at the very least, we can see that the 30-day MVRV for GRT is at its all-time low at the moment. How low it can go, we still don't know, because there's only a few months of data, right? So it's probably still in sort of discovery as far as figuring out exactly how low GRT's MVRV can go. Like, we have 10 years of MVRV data for Bitcoin, and we can say, okay, it seems like Bitcoin's 30-day MVRV has a tendency to flatten out at about minus 15%, which is where it is now, right? At least it has a tendency to do so. For GRT, we just don't know. Like, one thing that we can do is we can look at an even shorter time frame for MVRV, like the 7-day MVRV, although it's questionable how reliable it's going to be. But okay, so this is the average profit or loss of all addresses that have acquired GRT in the previous 7 days, right? So very short term, sort of swing traders. And actually, let me use the intraday one. Yeah, so it's definitely like the very, very, one sec. Something stuck in my throat, sorry. The short-term MVRV for GRT is at a sort of a pre-established bottom so far, around minus 23%, suggesting that on average, all of the addresses that have acquired GRT in the previous week are at about were today at about minus 20% on their initial investment. So what that suggests is a lot of pain. And in general, the lower the MVRV gets, the less sell side pressure there is going to be. And the more on average the coin is undervalued, right? But like I said, there's only so much data that we can use for these long-term indicators. So I would take this as with a grain of salt for sure. We can also look at the behavior of GRT holders in general, sort of long-term versus, large versus retail holders for GRT. So let's look at these two charts. Okay, so GRT is currently $1.3. So let's look at the behavior of addresses. One sec. Let's look at the behavior of, I don't want to look at all the price activity for GRT. This group is probably a good one to look into. So 100,000 to 1 million. Basically, these holders are up to $1 million worth of, they hold up to $1 million worth of GRT. First of all, let's see how many of these holders exist. Only about 260 of them. Let's plot the price of GRT over this chart as well. Yeah, so there's about 260 addresses holding between 100,000 and 1 million GRT. There's about 1.6K addresses holding between 10,000 and 100,000 GRT. So these are probably, this is probably the most representative group, and these are like mega whales and already some exchanges for GRT and some team holder wallets, team wallets. So I would take this group of addresses actually with a bit of grain of salt, but let's see what it looks like. Yeah. I mean, this initial distribution is going to mess up the charts a little bit, so that's why I want to zoom in. Let's look at the last month of data, maybe the last 2 months of data. Okay, so this group in particular seems to have accumulated a little bit, or their total balance, their combined balance seems to have grown slightly into the drop, and then back down. But overall, it seems to sort of hover around these levels, and not really doing a whole lot throughout the April. But like I said, it's only 260 addresses. So these this group of 10,000 and 100,000 GRT are probably the most representative, like I said, because there's about 1.6 thousand of them. It seems like, yeah, similar to the previous one, there hasn't really been an accumulation spree over the last month or so, but in the past couple of days, there has been a slight uptick in their combined balances, which might suggest sort of mid-range GRT holders start to buy the dip into a little bit. Yeah, just slightly overall. Overall, at the very least, I would say there's no sort of signs of massive decline in the balance of these holders, which would suggest sort of network-wide exodus of whales. But at the same time, there's no massive spike in their combined balances as well. They're neither accumulating nor dumping. They're sort of plateauing at the moment. So, take that for what you want, right? There's sometimes what I like to see, like, for example, for BTC in particular, what you want to see is these accumulation sprees, right? Suggesting that large GRT holders or Bitcoin holders are expressing confidence in the short and long-term price action of the coin. We're not seeing that for GRT at the moment, but at the same time, we're also not seeing a massive sort of lack of confidence among its large traders over the last month or so. So overall, I mean, in the very short term, like I said, exchange inflow very high, suggesting that people are getting the hell away from this coin. I don't think that's necessarily going to be a bad thing. Like I said, in a very short term, this suggests that people are overselling this coin and undervaluing this coin, and this is happening for a lot of them over the last 24 hours. And sometimes that can indicate, like we've seen for IFI, it can indicate periods of short-term price recovery if there is enough buy-side pressure, or if there's enough people looking to buy into the dip to kind of counteract this increasing sell-side pressure. And then as far as general GRT data is concerned, I think its on-chain activity is looking fine, both transaction volume and active addresses. So basically both the amount of addresses interacting with GRT and the amount of value being transacted on the GRT network are relatively stable. They're not in a decline, suggesting that the coin is doing okay in the sort of mid to long term, probably. I don't want to dive deep into other on-chain metrics just because we don't really have that much time. We're already at 4 minutes past the hour. So what was Brad, do you know what the second highest ranked coin was as far as votes are concerned? What did the people vote for most? I think it was Uniswap.
Okay. Yep, it was Uni.
Okay. So is Max still on the call? I know Max loves Uni and follows it religiously. Let's see what
he does follow, and I like a lot. I was 2 times right and 1 time very wrong on Uni in my course. So yeah, now I'm very attached to it.
So what are you feeling as far as Uni is concerned?
Oh,
while I
need
look
to
at
check.
Some of the metrics?
I was more concerned about curve, as I had a mistake there. When we finished with Uni, maybe then connected with SANR, make a prediction on it.
Sure.
Whatever outcome of our analysis will be. Okay.
Sure. Okay. So let's start with again, exchange-related data. So Uniswap, I mean, yeah, there's a slight uptick in exchange inflow, but actually not that much. Not a whole lot of additional sell-side pressure moving for Uni at the moment. We do see a relative spike in the amount of deposits for Uni around around yesterday's top. We see it here as well around this stop, and then here as well around this stop. So what daily deposits are, they basically show the amount of active deposit addresses. So deposit addresses are addresses that are used to funnel a particular coin to exchanges. So the more deposit addresses there are active on a daily basis, the more presumably entities are moving coins to exchanges to sell, right? So that's why sometimes you use deposit addresses as a proxy for the amount of sell-side pressure, similar to exchange inflow. When you see spikes, it suggests, okay, a lot more people are starting to move their money to exchanges, their Uni to exchanges. There might be an increased sell-side pressure. So we've seen it around several local tops. It's actually been sort of in a decline for a while now, but every now and again, it seems to spike around the local price tops. Overall, I mean, there's not a whole lot of panic around Uni, like maybe a little bit, but not a whole lot in the last 24 to 48 hours. I do want to see, like for Uni now, we can look at value indicators like MVRV. And yeah, okay, so Uni's 30-day MVRV is right around the 3% mark at the moment. So right around the break-even mark. And you can kind of see how it looked like throughout this bull cycle. It seems to have bottomed out around the break-even mark, maybe a little bit below, around 5%. And if we look at the last year of data, starting from the actual, discounting the first month, which is usually when the MVRV ratio begins to normalize. So as far as from the beginning of Uni's 30-day MVRV, we can kind of see that these are the lowest levels that it has reached, maybe minus 13%, minus 20%. On December before the sort of market-wide rally. So there is still sort of room for us to drop before we hit historical lows for Uniswap's MVRV. But overall, we're definitely not super overvalued anymore. We're not at these levels that we saw in January and February. Holders are at around the break-even point, which is just think for yourself. If you were at about the break even for Uni, would you sell your bags at the moment, or would you, hope that the market recovers in order to take more profits, right? This is sort of the way to analyze MVRV in general. So we can also look at the social volume for Uni. I'm interested in how it looks. Okay. So social volume is the amount of mentions of a particular coin in crypto social media. And sometimes what we see is that spikes in social volume, when they coincide with spike in coin's price, it suggests that a lot of people are talking about the coin. A lot of market speculators have become hyper aware of the rally, and therefore it's usually signaling overvalued conditions, market euphoria, and very often tends to coincide with short-term price stops. Like if you see Ethereum's social volume, you will see what happened yesterday. Yeah, right around there, right before the correction, and you saw it here as well, around several sort of local tops. So moving back to Uni, there have been sort of upticks in social volume around periods of price consolidation or correction here and here, right at the top, right before the correction, right at the local top, and then slight uptick as Uni started to recover once again. So overall, at the moment, there's not a whole lot of people over the last 24 hours talking about Uni in particular. I think they're probably busy with other topics to discuss, given that the whole market is on fire. But in general, the way that you want to use this metric is that if you see massive spikes in social volume, usually it suggests overvalued conditions. What you really want is stretches of time where people aren't really talking much about the coin, where sort of the coin is flying under the radar a little bit, allowing its price to appreciate more before the FOMO crowd comes in and ruins the party forever and over-leverages long and basically nukes us back down, right? And then as far as active addresses and general on-chain activity for Uni, I think it's massive. Yeah, I mean, Uni is one of the most used coins still on the Ethereum blockchain. In the last 24 hours, there was about 6,700 addresses interacting with Uni. That's easily putting it into top 10 coins. Overall, I think in the sort of on the mid to long term scale, Uni, Chainlink, Maker, these are all coins that are still very much crowd favorites, and there's a whole bunch of people happy to interact with them. By the way, you see these sort of spikes in daily active addresses around local price stops as well. Usually the reason why that happens is because a lot more people are starting to move their coins to exchanges, and that's why you'll see upticks in addresses. And if you see, if we look at daily active deposits, pretty much every time you see spike in daily active addresses, you will see a correlating spike in daily active deposits, suggesting that these spikes they're not happening because for some reason people have discovered there's a whole new use case for Uni and they're starting to use it more than average. No, the reason why you're seeing it spike like this is because people are starting to take profits. So yeah, keep it in mind. And this is also what we see yesterday as well. And then let's look at a net profit loss for Uni. So a few like massive outliers that I do want to move out of to see what's happening on a shorter scale. It doesn't seem like at the moment people are selling it at a massive loss. So for now, at least, it seems like Uni holders are sort of, yeah, I mean, most of these metrics are really suggesting that compared to the rest of the market, Uni holders are panicking a lot. Like exchange inflow is a bit high, but it's not super significant relative to other coins. Net profit loss isn't really suggesting massive spikes in profit taking. Yeah, I mean, I think Uni is looking okay at the moment. I wouldn't really, it's not showing any massive bullish signs, but at the same time, it's not showing any immediate red flags. I think probably social volume is still a little bit on the uptrend, still a little bit overhyped for the moment, but yeah, it's difficult to like say, okay, Uni is going to beat the market trend and whatever Bitcoin does, Uni is going to ignore it. But overall, I think it's not looking too bad at the moment. So, okay, like Max said, I do want to sort of move right very quickly into SANR. We do this every call. SANR, guys, for those of you that are unfamiliar with it, so this is a side project that we've been working on. It's something that we've wanted to develop since 2017 when Santiment was first sort of developed as a platform, is a decentralized marketplace where you can predict where the market is going to be headed next, and you can tokenize your knowledge, right? So the way that it works is if you have an idea of where the market is headed next, you can come here and you can connect your MetaMask account and create a prediction. Each prediction that you create gets minted as an NFT and recorded on the blockchain. So it's there forever. Whatever trends, wherever a prediction you make, it lives on the blockchain forever. It's immutable, and it's sort of part of your reputation as far as how well you can read the markets, right? So currently, these are my active predictions. A few days ago, I said that Ethereum is going to rally. I was up by like 20% before today's correction. And then last week, we kind of made this prediction that Bitcoin might rise. We got kind of screwed on it. Although, to be fair, we kind of just made it as a demonstration of how the platform works. But either way, let's say that we think that there's a lot of sort of market-wide fear at the moment. Not just for Uni, but all of the coins are suggesting sort of oversold conditions. So in the short term, we might say, okay, Uni is showing, relative signs of strength. You can set up certain additional parameters like target price and stop loss. We're not going to do any of that. We're just going to say, okay, from this point on, we believe that Uni might rise compared to Bitcoin. We open the forecast, and the forecast gets recorded on the blockchain, on the Ethereum blockchain, as an NFT. So one of the cool things that you can do on the platform is you can kind of look at what all the other Santiment team members and community members think about the market. You can find signals and signal creators that have been mega profitable, and you can kind of use them as a barometer of where you think the market will be headed next. Like, for example, Short Maniac, which is currently the top of our leaderboards, it has across 96 different predictions that he made. He's plus 308% on his prediction. So he's basically 300x his initial portfolio, right? So if I believe that this person in particular has made me very sort of confident that he is aware of where the market will be headed next, I can follow this person so that I get notified the next time that he creates a signal on SANR, and I can copy trade him, and we can front run the market together, right? But I think for now, guys, the best thing that you can do is kind of check out the platform. The website is sanr.santiment.net. Create a few, just play around with it. It's free. If you want to stake your prediction in a reward program so that the best predictions, every 2 weeks, the best predictions get part of the SANR reward pool. So if you want to kind of gamble a little bit and put some SAN into your prediction so that you get integrated into a reward pool, you can also enter the forecast in a reward program. But to do that, you will need to sort of pay for gas fees. However, if you don't want to do it, if you just want to compete with other players on the market, both me and other people in the Santiment community, just create a prediction here and let's see who did better next week, right? So currently I have 3 outstanding predictions. I predicted that Bitcoin is going to rise in the last week, which is currently not looking good. I did predict Ethereum going to pump, and currently we said, okay, Uni might increase compared to BTC. It's not necessarily the most confident prediction that I've made, but it's one that's currently active, and I'm already 0.46% up on my initial prediction. So sanr.santiment.net, guys, check it out. Any feedback that you have, we're more than happy to kind of hear it. It's still in beta. We're thinking of new ways to improve the platform. So any type of ideas that you have, just let us know. And with that, Brian, I think we can end it here, unless there are other questions in the chat that we haven't answered and we want to get to.
No, I mean, we have a lot of coin requests, but those can wait until we're back on Discord. If you guys are in our server, just feel free to drop your questions about all sorts of these assets. TRKA, lots and lots of other ones. I'm seeing Luna, Maker, Raiden. We can address all these. Just drop us some messages, and we'll be happy to give you a few charts and templates that'll give you a few ideas on where things might be going from here. But for now, we appreciate all of you. We had a very high viewer count for the stream, and I can't thank you all enough for continuing to spread the word. If you'd like to spread the word about our website in general, don't forget that we've got referral links where we share 25 to 35% of any sign-up cost with you, just for sending the link over to people and they sign up, whatever that cost is that they choose to sign up with. We split that with you. So spread the word. We feel like we're doing some pretty innovative stuff here, and your guys' support and help has really helped us reach the kind of popularity that we're starting to see. So thank you all so much, and we look forward to chatting with you all next week.
So I did see a few comments for Ampleforth in particular. We were actually discussing it last, maybe yesterday, I can't remember, or on one of our recent calls. It has some very interesting data. I'm not going to get into it today, but we will write about it early next week. So later today, we are going to be releasing a weekly pro report that we do every week. So if you have a Santiment Sandbase Pro subscription, you will be able to read everything that we currently think about the state of the market. And then early next week, we will be covering Ampleforth in more details, because I do think there's quite an interesting sort of set of metrics, especially with the launch of their governance coin a few days ago. So yeah, keep an eye on that. But in the meantime, guys, check out app.santiment.net. Everything that we talked about today, all of the metrics, all of the indicators, and a lot more than we haven't discussed is available there. There's a 2-week free trial, and then afterwards, it's just $49 a month. I think it's the most affordable on-chain plus social plus other types of information aggregator on the market. I think it's more than worth the money for your buck. So yeah, let us know what you think. Keep an eye on Ampleforth Monday or Tuesday next week. And until then, weekly pro report is coming out later today, where we're going to kind of dissect the entire market as well. So with that, if you want to keep talking to us, move over to our Discord. There's a link in the description. We are going to be sort of spitballing where we think the market is going to be headed next. Thank you everyone for joining. I hope this was useful. Let me know how you would like us to improve these types of streams. Sometimes we go a bit overboard. Sometimes we get too detailed into specific coins that some people don't really like. Any sort of suggestions that you have, write them in chat. And yeah, we're always looking to improve the stream. All right. Thank you, Brian. Thank you, Max, for sharing your thoughts on the market. And everybody else, I'll see you next week.
Bye, guys.
Thank you. Bye-bye.